The second video on accounting for companies, right? So in our previous video we went over an introduction to companies. Now the next thing we're going to look at is the issuing of shares, right? So what is issuing of shares? So issuing of shares is where the company sells shares, right? So they sell shares to the public, right? So they sell shares to the public, and in return the public gives them money for those shares, right? And then those people that buy the shares are called shareholders, right? They are called shareholders. So what does this have to do with accounting? How do we account for this, right? How do you account for an issue of shares? The first thing that we need to understand is the accounts that are affected by the issuing of shares. So we have two accounts, namely number one, obviously because we are receiving money, anything that has to do with money, we always have bank. And bank is an asset, right? And then the second account, we have a specific account called ordinary share capital. And all movements in shares are recorded in our ordinary share capital account, which is an equity account. So it means that these two accounts, because it's an asset and equity, they will affect our balance sheet, because that's where assets and equity goes to our balance sheet. So these are the accounts that are affected, right? And then what notes are affected by the issuing of shares? We have a specific note called the ordinary share capital note. Ordinary share capital note. And in this note we record everything that has to do with our shares. We record how many shares have been issued. Are they issued at the beginning, during the year, or at the end of the year? At what price per share, and how much in total did we get for those shares? And then we record that in our ordinary share capital note. So it's a note that's keeping track of everything that is happening with our shares in the company, right? And the end of that note is what you take to your balance sheet, right? So that's the issuing of shares. Company issues shares, people buy shares, they become shareholders. And then how do we account for this? We account for this by putting it in our ordinary share capital note, and the accounts that would be affected by this transaction would be your bank and your ordinary share, which go to your balance sheet. So now let's look at an example, right, or an activity that's going to show us how to record an issue of shares in our ordinary share capital note. So activity 1 says that you are presented with information from the records of Josie Limited, right? The financial year end is 28 February 2021. So it's important that we understand what financial year, or that we know which financial year we are dealing with, right? So this is our financial year. It ends on the 28th of Feb 2021. So it means that it would have started on the 1st of March 2020. So it's always 1 year back and 1 month forward to get the start of your year. So this is our financial year. So why am I writing out my financial year? Because I need to understand that this is the end and this is the beginning, right? So any amounts that they give me on this date would be my opening amounts, right? So anything at the beginning is your opening amount, and any amounts that they give me on this date would be my closing amounts, so my closing balances, right? So that's why we need to understand what financial year we are working in, and when does it start and when does it end. Okay, fine. Then the next thing they tell us is that we need to prepare the following notes to the balance sheet: the share capital note. So for now we're going to focus on the share capital note, then we'll do retained income later on. So let's go and see how to prepare the ordinary share capital note. So